Good evening, ladies and gentlemen. You're watching Startup Central. And ladies and gentlemen, ET Now is celebrating 16 long years of delivering quality business news. It was on this day, 16 years back, that we started off on a journey to becoming one of the biggest brands in the world of business, policy, and of course, markets. So on this occasion, I welcome you all to this very special episode where we dive deep into the world of startups with none other than two legendary OGs of the startup ecosystem who have decades of experience as visionaries, as entrepreneurs, investors, and mentors. Today, we're honored to bring you insights, stories, and wisdom from these two pioneers whose influence continues to shape the startup landscape. So get ready for a conversation-packed and inspiration and actionable takeaways-packed show. This is a show you definitely do not want to miss. All right, on that note, let me first bring on the broadcast Gopal Srinivasan, Chairman and MD of TVS Capital. Thank you very much, Mr. Srinivasan, for joining us here on ET Now. Welcome to the show. Let me first start by asking you about, TVS Capital Funds having closed its fourth and biggest capital fund till date of over 3,500 crores. Tell us about where all have you received participation from?
I think the growth of India is so evident and so palpable. In this fund, which is our fourth fund, we've raised about 8,000 crores, roughly 7 to 8,000 crores so far from the beginning of time. We started in 2007. Basically, the institutional participation has been remarkable, Sumita. 33% has come from institutions. We never expected in India insurance, banks would participate. And you know what? This is before the advent of pensions. There are 35 trillion rupees in pensions, right? So I think that would be my big story, that there is institutional capital that's very well aligned with private equity, are more and more available for the growth of Indian entrepreneurship and therefore for the growth of India.
Right. So that's very interesting that you mentioned about participation from institutions. And then let's put the focus more on that point, given the fact that, this has been one of the asks that domestic pools of capital, they need to be increased. And that's been one of the biggest demands, like I said, of the entrepreneurial and startup ecosystem, so that reliance on foreign capital can be reduced. But how much more needs to be done before that reliance is brought down significantly?
I think, I don't want to say the road is endless, but every time we do more, we actually find even more opportunity for more to be done. So the main thing is on two fronts. Let me take both the fronts. One is on the front of long-term capital from pensions. Both PFRDA and MOLE, Ministry of Labour and Employment, which runs EPFO, have given signals that they want to invest into private equity and venture capital, which is the gateway for our startups. I think that needs to be operationalized. For example, PFRDA has a complex accounting system that needs to be tuned to align with the way private equity funding works. So I think the next big step will be pensions. 35 trillion growing at, say, 10%, which means every year, roughly you have something like 15, 20, 20,000 crores available for private equity. Remember, total funding from Indian private equity last year is about 60, 70,000 crores, which is close to 7, 8 billion. So pension is the next big one. The second front is SEBI. SEBI has done some great work with co-investment vehicles, but they also need to create new classes of vehicles to attract, for example, funds with more flexible operating policies, which IFSCA, the Gift City IFSCA, offers. And I think that will be the next big front. Simple example is a private equity fund in India cannot have an investor who comes and says, listen, when you exit, give me my shares. I don't want money. There are very many types of investors and they all have different needs. Some people have 20-year horizons. So I think those kind of changes in SEBI, like open-ended funds, payment in kind, leverage, pledging of shares will also happen. I'm very bullish. I think the government has really said something fantastic, Sumita. This year's budget, they said deregulation is a driver of growth. And I think we're seeing it in action in both SEBI and RBI.
Right, so very interesting points. Some of them you've made with respect to what more can be done to sort of boost domestic pools of capital. And so far, you're mostly invested into fintech ecosystem of the country. But what are the other areas of interest, given the fact that if you just close this fund? So what are some of the other areas that you're looking at with respect to investing in some of these startups?
For us, I think in my mind, there are four interesting areas in India. If I were to invest other than consumer, right, which we don't understand: financial services, software and services, health, pharma, industrials. Right? These are the four, my mind, the four big areas. So this fund, we have carefully built a team to venture into software. We call it enterprise tech, or you can call it tech services, whichever you wish. But basically IT services, product software companies, and basically that genre of businesses. Together, Sumita, financial services and enterprise software represent about 40-45% of investing in India. But if let us say talent was no bar, and if ability to learn instantly was not a bar, probably pharma and including synthetic bio and industrials, next 10 years, that could be the two very, very large areas for India in addition to technology and FS.
All right. So you pledge to stay away from consumer companies, but are betting a big on software, IT product and software companies. But let me ask you, sir, about the defense ecosystem, given the fact that, you know, the government has also been pushing for making in India so far as the defense ecosystem is concerned. And after these geopolitical disruptions and conflicts that have emanated, a lot of focus has been made by VCs on the defense startup ecosystem of the country. In fact, there are very many drone companies that have also raised funding. But how are you looking at this sector? And is this something that is of interest to you? And will you be looking at investments into this ecosystem?
Clearly, it's a sector which is unfortunately going to grow at a very rapid speed given the way the world is growing. But I also want to caution you, Sumita, this is a sector where traditional industrials will play very strong games. You already have Adani, you have Mr. Anil Ambani, you have L&T, you have Tatas, you have Kalyanis, and you'll have many, many more players in the defense area. So defense is not a natural PE play, in my opinion. It is a selective PE play. And therefore, one has to be cautious with defense. It's a very long cycle business. Orders don't happen very quickly. They have to go through rigorous testing and evaluation. So I'm not necessarily sure that defense directly in terms of defense and aerospace, but components of that coming from the private equity and venture ecosystem, maybe electronic designs, maybe things to do with night vision, like Tonbo is an interesting company that one of my friends has invested in, Matthew Syriac. You'll see, I think you'll see smaller parts of that come from VCP opportunities. But the large things like, for example, the Rafale fuselage, or somebody just talked about something else for the Rafale yesterday, those may come from the traditional large players.
Right, so you're not really bullish on capital, and you believe that this is going to be a limited play given the fact that there are a few handful of companies, big companies that are invested in it. And of course, this is not going to be a continuous play. But let's also talk about one of the other segments, quick commerce segment. You do have older players looking at scaling up in the ecosystem, and then you have new ones also looking at betting big on the ecosystem. However, you, sir, you've called this frenzy and rapid expansion which is happening in the ecosystem to be unsustainable. What is your rationale behind that argument? Because this is essentially where consumers are moving, right? There is a lot of convenience and consumers are moving to these spaces. And of course, there is tier 2 and 3 towns to be explored as well. So why are you not so bullish about this?
So I could be completely wrong, and I'm happy if I'm wrong, Sumita. My logic is we look at a business and saying in 20 years, will this business continue to be strong and exist, right? So when I look at 20 years of a business like quick commerce, and I see issues like, number one, supply of young talent who are willing to work at a very, very throwaway price, B, city congestion, C, our own adaptation to where we live. I'm still not sure that this kind of high valuation for quick commerce frenzy will last in Vikshit Bharat 2047 timeframe. I think with the average per capita income of Indians growing up, I'm not sure being a quick commerce rider is my desired life dream and ambition. I think people do it because it's important for them to earn money, to go up the ladder and become something else. So I think the talent supply and other such issues will, in the long term, it'll be available, but I'm not sure it's going to be this kind of frenzy that it is today. And hence, we don't understand consumer, Sumita, so we will not invest in that area.
Right. So that's your long-term view of the quick commerce ecosystem. That is by Viksit Bharat 2047. That time period you're not really bullish on. But what are some of the near-term trends that you see in the sector? How will this sector evolve over the next 5 years?
Next 5 years, it has to grow, isn't it? Because it is basically, there's enough talent supply and there's enough middle class growth to consume. So as people move into jobs, then ordering a packet of paper that you needed for your printer or getting a printout through quick commerce will continue to be an attractive way to basically get your work done. So I don't have any doubt about the next few years, but then if you're a 20-year investor, one would have to think carefully.
Right. So short-term outlook is you're pretty confident about these companies in the short term, but not so much in the longer run. But sir, let's also talk about some of your portfolio companies, especially in the fintech space. You have PhonePe, Digit Insurance. How are you looking at, and how those bets have played out for TVS Capital Funds? How do you look at that?
I see two things there, Sumita. The first is fundamentally our investment in fintech has always been looking at population scale. So PhonePe is a clear example of population scale product because payment and on top of it, loans and other products that come are population scale products, right? And similarly, if you look at insurance, it's enormously underserved. Insurance is sold. Nobody buys insurance. Everybody sells insurance, right? So we've always been looking at population scale opportunities, and therefore there is at least 2/3 of India is yet to participate. So very, very happy to see those businesses compound steadily away for the next couple of decades. Secondly, in terms of where will payment go, I think, as you said correctly, there will be opportunities outside of India where basically UPI and UPI-like systems are going. But I also see this idea that the past governor of RBI proposed called ULI, right? Unified Lending Interface, where at one pull, you could actually get all the data you need to underwrite. You could get account aggregator data, land records data, you could get securities ownership data, insurance ownership data, and on and on. You could get, if you're a farmer, how much milk have you poured every day for the last 2 years. I think ULI is going to be very liberating because suddenly it's going to let secured lending happen very easily because land records data is very available. And also, it is going to make cash flow based lending, like say dairy farmers, much more accessible and at better prices. So I'm very bullish that the next big revolution of lending might come around ULI, provided it is all pulled together and executed right. And that's the big if. But I'm confident that in today's India, with the kind of RBI that there is today, it might become, I would say I'm 70% probability it'll happen.
All right, so unified lending interface, so ULI is something that's going to drive the growth of UPI in the country even further. And we do understand that, sir, the government has big plans so far as exporting India's payment infrastructure or UPI is concerned to some of these other countries. And there's been a lot of interest from other countries in India's payment ecosystem as well. But on that note, let me ask you one final question before we let you go. And this is essentially about your funding outlook for 2025. We did see a bit of funding winter last year. What are some of the trends that you foresee in the year to come in terms of investments, because control, if you see, that's become a large part. Will that continue? And what about buyouts? If you could also throw some light on some of those factors and the big trends that you're factoring in for 2025.
As you saw last year, control has become a very large part of the 35 billion. I think 10, 15 or some such number is control and buyout. So I think that will continue. And that's a perennial business. Old businesses go sideways. There are succession issues. People want to sell, move on, etc. That is going to be a very large part of investing. But the balance of the area, I don't see that kind of, this is not a frenzy phase, right? For example, 2-3 years ago, e-commerce, quick commerce was a frenzy phase. There was a time when everybody was putting money into fintechs. I see a little bit slow here as people are adapting to new types of investing models and new types of opportunities. For example, growth companies are going more towards control like us. We keep on talking about control and transformation opportunities more and more. Venture companies are wanting to come to growth. There is the underlying transformation going on in India. But Sumita, keep in mind one thing. India is still a very shallow market for assets. It is not a very high asset availability market still. And that, I think, is about 4-5 years away.
All right, so with that, we leave the conversation at that, but would love to speak to you in person whenever you're in Delhi next. Thank you very much for taking the time out and speaking to us right here on ET Now. Hope to have you on the show super soon. All right, ladies and gentlemen, with that, it's time now for us to get into a very short break. But after the short break, we bring you another very important conversation, an exclusive conversation with Sanjeev Bikhchandani, who's the founder and executive chairman of InfoEdge. He says that it's not so bad to drift in your career. Exactly why? We'll find that out after this short break.